third episode today of the trading course, Seeking Liquidity. And today we're going to be kind of revisiting some of the previous topics that I've just covered in the other videos. If you guys have been enjoying it, I thought I'd change up the formatting / the layout of how I'm going to be producing these videos going forward. I feel like it's a lot more digestible and it sort of reflects what you'd be learning in a university, for example, if it's coming from a lecture slides off a presentation. So just a quick plug as well to start off the video. I have made a Telegram group called Seeking Liquidity where I'm going to be revealing and showing my market analysis on there day to day, and so those that are willing to learn or already experienced traders can check out my analysis and use that as a framework to start making your money on a day-to-day basis. Okay, and a quick plug, TWT Trades, if you guys like the new logo, please let me know because I spent a lot of time working on it. So thank you guys for watching my video. So let's go straight into the first slide. So Seeking into liquidity, a deep dive into the forex trading. So we're going to be breaking down in the next few videos a real step-by-step on what and how I'm going to analyze the market, so you guys can really understand how the market operates and just overall understand how to make money. Because I see a lot of fake gurus, I see a lot of people out there who are trying to teach you how to make money, but I'm actually someone who's tried and tested methods, read hundreds of books, watched a shit ton of YouTube videos and self-learned a lot of it, and have legitimately picked up on what is fake and what isn't fake, and is wanting to teach you guys for free how to actually make money legitimately. Okay, so let's start off. Well, why are you actually wanting to watch these videos in the first place, right? And I feel like I should have started this videos off. I kind of started the videos off kind of going into really in-depth knowledge, and I feel like if you want to learn how to trade, I feel like this is the best way to learn because you're learning straight from scratch. So realistically, you want to learn because you want a new source of funding or a side hustle. You want to make some money on the side, or you don't even like your 9-to-5 job, and you're here because you want to learn how to make money on a day-to-day basis that doesn't require too much of an upfront investment, and also it's yourself that's being able to put yourself in a position where you're now self-employed. So some key facts that, to be honest with you, I don't think were really relevant, but I thought was a nice inclusion is that, and it is also important that you need to know when you are trading forex as opposed to crypto or anything else. It's very similar to stocks. It is 24 hours of the day but only 5 days a week. So on the weekends you literally and physically cannot trade forex unless you're willing to trade at like 12 o'clock at night in the UK time. So, and that's just how time frames work, by the way. Obviously, you know, if you're in the US, then the time's gonna be different in the Australia, etc., etc. And the same thing applies in trading. So there's gonna be different types of liquidity. There's gonna be different types of sort of movement in the market, because different times of the day is going to show you different types of the chart, and you're going to see where there's going to be more volatility, more movement, as opposed to other time frames and other times of the day. So there's specific time frames that you'd want to specifically look at, for example, the morning of the USA or the morning of the UK time. So obviously being in the UK, the morning would be 7 a.m. to 10 a.m. and then the morning of the USA for UK traders, for example, would be 8:30. Obviously for the market for the New York traders, or that would be the equivalent of around, I think, 12:30 UK time. So those little things I will show you on the chart, and how to adjust your chart so that you can actually see these different things and have these indicators on your chart to show you what you should be and would be looking at. So what is liquidity? Now, I mentioned liquidity in the last video and I kind of showed you a brief overview of what liquidity is. Now, this image on the right kind of shows you roughly what liquidity is in a nice visualization. But reality is, you need to understand that liquidity is literally what makes things happen. It's the reason why markets make these big candles, these big wicks here. And the most liquid pairs and the ones that most people trade is Euro USD, USD JPY, GBP USD, and another one that I didn't include actually was gold. Everyone trades, a lot of traders trade gold, and on the other side you have futures, so you have like NASDAQ, you have S&P, where you can also trade that on a day-to-day, but I mainly have traded on Forex for the majority of my journey, so I'm only going to show you guys indicators and knowledge that I have in Forex, but I do plan to trade more derivative futures on NASDAQ and S&P, and I feel like it is a little bit more simplistic because you can kind of show cracking correlations between the two pairs and find areas of finding more money. But well, I've traded on Forex for most of my time, so that's where I'm going to put a lot of my focus on. And don't be a monkey, okay? Don't be a retail trader. Don't be an idiot and try to think that only the people that have millions of pounds can actually make money on trading. Don't be a monkey. Don't be the ones that's following the crowd. Be the one to offset yourself. At the end of the day, yes, central banks, commercial banks, they all do make the majority of the trades that happen on a day to day. But you need to then be able to find the smallness of that and see how these big market moves, these big political changes are going to help impact you in a positive manner, because you can then find small areas to make a little bit of money. Even if you made £100 a day, that is a lot of money to someone who's a beginner and a lot of money to someone who's just trying to make it a side hustle, because then that's £500 a week. And you need to think in smaller fractals. Don't think you can go into these charts on the first day and make £1,000,000 like these commercial banks are, like these central banks are. So just really scale down your ideas of how much money you want to make, but at the same time still be very optimistic. This is a very optimistic career and there's a lot of opportunities out there for you. So as I mentioned before, there was a lot of economic events that can impact the liquidity and the movement of the market. So in the first video, I think the second video, I mentioned that you shouldn't trade on days that have NFP and FOMC. So the reason why I say this is because when you trade on these specific days is because you're going to see that there's a lot of liquidity on these days, but also the markets are very, very unpredictable. And because of that, you literally will not know the direction that the market will plan to go towards. So the reason why I also trade on the very popular markets, such as Euro USD, etc., is because they're very popular and there's different popularities going to have different liquidities, as opposed to exotic pairs, which I don't really reference too much, but are definitely still important. Then focus too much on those specific days. And as the picture kind of depicts, it's like you can then kind of take those days as like a rest day. You know, it's the same if you are, and I hope you are, everyone that's watching these videos, I hope you are hitting the gym at least 4 to 5 times a week, eating healthy and just working on your goals and visions. Same with trading is you can't trade every single day. You have to know when to want to trade and when to be able to find times where you're comfortable or you're happy knowing that you can't find an opportunity to trade that day, and use that as an opportunity to sort of work on other things, work on other passions, or just do the normal things that you were doing anyways besides trading. For me, trading has become a passion and I've really enjoyed it. I've been doing it for so many years, and overall just learning the overall task and the trade of the thing, of the idea of doing it, has allowed me to sort of develop and become more stronger in every other area around trading, not just trading itself, but focusing on other things like businesses and stuff like that. Like that's where I see trading as becoming a foundation for me, and I feel like to be able to have your first breath of entrepreneurial spirit, you know, this is a great way to start things off. And although this slide is sort of depicting the factors that affect liquidity during market hours, I've gone on a slight tangent about it, but at the same time, you kind of need to understand that these different peaks of different sessions will allow you to find specific areas and time frames to when to enter the trades. Okay? So, the benefits of high trading, tighter spreads. So you will learn how to do like stop losses, how to take profits, and you don't want to always have a tight stop loss. Now, I know a lot of traders out there will like to enjoy having a tight stop loss. And there's a book that I read called The Art of Execution, where there was a different type of trader who would have a really tight stop loss whenever their price would go down out of their region. And they start making a loss, they panic. And I highly disagree with this idea. I think you need to be willing to have the mentality to accept that you're in a loss maker and still watch as price can eventually trend up into your profit. And being patient is definitely one of the key skills alongside everything else like faster execution and reduced slippage. This is sort of the textbook written idea of what you should and shouldn't do. I think, yes, having a faster execution and yes, having a reduced slippage is important, but something that isn't written on the slides here is actually having a stronger mentality. I think becoming a trader has allowed me to become a lot more patient and allowed me to take on so many different factors whilst not being too overwhelmed with information. And I think when you eventually start developing this skill, you will see a lot of things sort of painting a picture. And so I thought this image was really cool. I thought it really depicts everything when it comes to the idea of trading. Is you kind of see the different indicators and the different ideas of what you can sort of come across when you start to trade. And one important thing is price manipulation. Now, I'm going to show you guys how you can actually depict price manipulation in the upcoming videos. where essentially the idea of price manipulation is there may be news articles or political changes or even the charts that sort of showing that price is planning to go up and up and up, when in reality the overall idea it wants to do is actually drop lower, and it's just sort of tricking those to think that price is going to run higher. We could use the idea of Bitcoin, for example, where people were tricked to think that price was going to run higher to £200,000. However, as we know now, Bitcoin is dropping significantly and people are panicking and selling as immediately as fast as possible. If you actually watch the first ever video I ever uploaded on my channel, which I'm really grateful on there because it's going to really help develop my digital footprint, in the sense that I literally called on the first video I ever uploaded that Ethereum was going to drop below 3,000 and it's going to continuously drop. And you guys can literally check out on that video. I literally stated super clearly it's going to drop this week coming, and it's done exactly that, if not better than I even anticipated. And so if you guys start to watch my videos, you will see that I'm not like any other trader. I've done a lot of research and I've done a lot of picking at the charts and doing a lot of that to be able to learn and know where the price and where things should happen. And I guess that kind of works into the idea of price manipulation. Slippage is very important, but again, I don't really want to go too much into that because it's more of a practical thing. Here we have the ideas of strategies for trading in liquid market and scalping. So these are the different types of trades that you can kind of take. So basically you can be a day trader, you can be a swing trader, or you could be a news trader. So you purposely trade when news happens. That's not what we're going to be focusing on this channel. We're going to be avoiding news because I don't like to take on super risky trades. I like to be consistent and precise in everything I take. So I don't like to trade on news. We are going to be showing you day trading / swing trading. So day trading is where you take the trade on the day and you close out on the same day, or if not the next day, so within the 24-hour span. And swing trading is where you could be holding a trade from Monday all the way up until next week Monday. So there's a bit of a mix between the two. There's a lot of pros and cons to both, and that could be a video for another day where I can kind of show you guys the pros and cons of the different types of trading, so the day trading and swing trading. And I hope that that can really help you guys understand where you think you will be better fitted in as well. And the tools, so I'm going to be showing you some very important tools and indicators that you can have on your charts, not necessarily as much as the mathematical, systematic, sort of stochastic rules. Although stochasticity is very important. I know the mathematical derivations of the stochastic models that you can learn. If you don't know what stochastic means, I know I'm just throwing some big words at that. It just means that the random variables that are constantly moving and they're constantly changing. And you learn stochasticity in physics and like the random movement of variables. But stochasticity is also related to asset movement and volatility. So it can kind of relate to the Markov model, if you guys will ever learn that or ever picked up on that in like very fine line economics. You kind of learn that stochasticity within like the certain specific models that you can learn, such as like the Ichimoku cloud is like a sort of model of stochasticity where it sort of depicts the volatility of the market into a specific model that can sort of predict the upcoming moves. And it's more of a pattern trade. I don't like to pattern trade too much. I like to look at specific facts that are given, and you'll kind of see how I show that as well. Again, open book. So this is again something that's quite large in the sense of like you can kind of see here. You have a small open book here. Basically, an open book is not very relevant in this type of trading. It's more relevant in sort of futures trading and crypto. You can kind of see on the left here, this will most likely be the prices that you can purchase something and the price that you can sell something. And you can kind of see the differences between the two different prices. Obviously, in this graph, it doesn't really show you exactly what you want, but basically, it just shows you the demand of what people were willing to pay and the demand that people are willing to sell. You'll tend to see that when it comes to something that's constantly increasing in value, the value of people want to sell it at is going to be higher than the value of people that want to buy it at. Naturally, people are willing to buy something for cheap and sell it for more. And that is the natural position of the market. And I'm kind of showing you guys the economic calendars like Forex Factory. If you guys want a link in the description down below, I can put that in there. All the different tools and all the different information and websites that I use. I heavily use the Financial Times and I heavily use Forex Factory for my news. So again, as you guys, if you need to, I can definitely plug that in. So this is the part of the video that I was really interested in, and this is the case study element. So liquidity in action and examples. So Euro/USD during the London-New York overlap. So think of it like this, right? News has just dropped, right? And so news has just dropped, and the USD as of right now is becoming a stronger currency, right? I want you to sort of imagine what I'm trying to tell you. So think of it as like Donald Trump has actually just said, guys, the employment in the US is far stronger than every other country across in a wide span. And they've managed to change the unemployment rates and they've increased employability. They've managed to include more jobs. That's going to naturally drive the economic growth of that economy. And so when the economic growth of that economy is going to begin to increase and become stronger, naturally the currency of the USD is going to increase. And so when we start to begin to trade, we will then ultimately be wanting to take opportunities of the bull position within USD. We will naturally be more inclined to find opportunities to trade that bullish momentum that's being given from the stronger economic growth of that economy. And that's where you kind of can put into the practical use of the news whilst implementing some of the indicators and the different pricing charts that I'm going to implement, and sort of frame something that's going to help you take some phenomenal high conviction plays that are going to allow you to make very high quality money and ultimately become better than the average in terms of traders. Okay, now we should be getting towards the end of these slides. I didn't want to have too many because I kind of want to keep it a little bit simple so that you guys can kind of pick up on everything that's happening. So some of the challenges is like there is going to be times where there'll be low liquidity on off hours. So for example, when you trade in Asian markets, you trade in the Australian market times, you will see that they're the sort of weird times that are going to be like late afternoons. Or even the lunch times of the New York session, which is like the UK time, which is like 7 p.m., tend to not be as demanding and high in liquidity as like the early mornings when traders are woken up and they're on the charts. They're going to be fresh, they're going to be open, they're going to be seeing all these different ideas ball into their head. So you're going to see a lot of liquidity happen. A lot of news happens in the early mornings and the early market times, such as 2 a.m. or even 2 a.m. New York time or 7 a.m. UK time. So they're definitely the times where you want to be sort of looking for taking a trade because you want to get in and out. You don't want to be holding a trade for too long, especially if you're day trading. You want to be in and take as much profit as you can and leave before anything else begins to change. Obviously, it's different if you're swing trading where you want to take in a trade and watch it grow and accumulate over a couple of days to then take a profit. Don't over leverage. Now, this is going to be more when we come into knowing how much you should put into each trade, how much money you should put into an account, how you will begin your journey in this entrepreneurial spirit, is being able to know and how to not become too risky. When you begin to implement risk, you're having these ideas in your mind of like you want to make as much money as possible, which is natural. I think anyone that starts a business is like, I don't want to put in £100 or £1,000 or £10,000 and then in the end of the year I lose it all, because that's a bad investment. But if you slowly scale yourself in and be willing to take losses, because naturally at the end of the day, no business works out immediately. I know from my fair share. But at the same time, I've put in a decent amount into trading and I've known and witnessed losses that have happened because of non-calculated risk or uncalculated political changes. But those kinds of changes is where you can take those times to reflect on those changes, learn why you made those mistakes, and keep going forward in trying to rectify that when it comes to the next time you come across something similar to that scenario. And it's sort of learning from your mistakes, and that's kind of where you develop as an individual. And that kind of taps into what I was just trying to say. Like, there's always going to be times there's going to be unexpected news that you just did not anticipate. Even if you had high conviction or the high idea that the USD was going to increase that day, it could very well just try and capitulate. And capitulation just basically means it begins to drop. Like, as I said before. Where price can literally just start to begin to drop lower and lower and lower when you were anticipating it to run higher and higher and higher. And that's just sort of unexpected, where you just didn't anticipate it. And kind of the final takeaways of this video is just a sign of say, like, I'm here to teach you. And I don't know how you've come across this video, but please comment in the comment section down below how you came across this video. I'd love to know how you guys are finding my videos, what you think of the videos, what I could do going forward in terms of improving the quality of them. I'm trying to improve it as much as I can every single time I upload. And so I just want to remember you guys that we're here together, and I make these videos to reflect on one individual that I have a lot of appreciation for, and I hope that when they come across these videos, they can really learn from this. I try to make it as simplistic as possible, as I know this is very an intensive area, and hopefully they can really appreciate the quality that I put into these videos, and they're able to learn everything. I know they're my biggest supporter, so hopefully when they watch this video, they can hear the small nice message that I put at the end of this video today. But hopefully, guys, if this is working out for them, then hopefully it should work out for the rest of you guys, because I'm trying to make it as simplistic as possible, and I was reflecting a lot of this knowledge as someone that has not much financial knowledge, or still has a lot of financial knowledge, but still wants to learn more. And this is very different to what you learn in books, because I'm kind of showing you in more of a practical sense rather than the book showing you in a holistic sense, where it's kind of showing you what can happen, how it can happen, etc. I'm going to show you the live knowledge and the live data and the live applications of everything. And you can kind of pick up on one of the videos I just uploaded where I made £10,000 off Ethereum. And you can see that is a live trade. That's a live video. That's watching the charts happen as it happens. And you can see in the time frames, there's no editing, there's no nothing happening. I just sped it up because I don't think anyone's willing to sit there for 3 hours to watch that happen. And yeah, so the final thought is, in Forex, liquidity is the lifeblood of the market, and seek it wisely. And I completely agree with that quote. So guys, if you did like and subscribe this video, if you did like this video, please like and subscribe, guys, and don't forget to join the Telegram group. I've put the link in the description down below. We're trying to get to around 100 followers or subscribers, or whatever Telegram calls it, and I'm going to be releasing market signals for free on that channel. So guys, do not miss out on a great opportunity to be one of the first to get some of this free analysis. And again, please let me know how you find these videos and if there's anything you want me to improve on going forward. Thank you guys for listening, and peace.